Hello, my name is Patrick. I'm a chartered accountant, a certified UK trainer with a fancy new logo, that QuickBooks Chap on the internet, and also head of account here at Boffix. In this video, we're going to be talking about your profit and loss account. If you haven't already, make sure you head over to the balance sheet video where we explain what the balance sheet is. And now for the second most important statement within your financial statement, the profit and loss account. Let's go straight into it and explain exactly what that means. Okay, set of accounts. So as you saw in the last one, we looked at a statement of financial position, which is your balance sheet. In this one, we're going to be looking at a detailed income statement or income statement just there. Now, typically in a set of accounts, you'll have your traditional income statement and then you'll have your detailed one. Really, for your benefit, you want to be looking at a detailed one to be able to understand exactly what's going on. Now, the income statement or profit and loss is what you may have heard it for. It's basically going to be explaining how much money that company has earned during a period. Now, the period is told you at the very top there. So in this case, the year ended to the 31st of March 2020. So what I would expect that to mean from the 1st of April, how much income have I earned all the way up to the 31st of March? And then how much expenditure has my company incurred from the 1st all the way to the 3rd. Now, if you remember in this first scenario back in that balance sheet one, this is a really simple scenario. In this one, we earned £100 of turnover. We spent £50 of purchases, so buying goods, which meant that we created a profit for this particular year of £50. And if we go back to that balance sheet item we saw in that last video, that's where that profit figure of £50 appears just there. Now remember, this is a really simplified version of it. So what I would say here is just to get your head around what this information is telling me. It's telling me that my turnover or sales in this figure was £100. I spent £50, giving me a profit and loss. So in the simplistic terms, that's all the profit and loss is telling me. How much income I had, how much expenditure did I incur, and then what the profit's going to be. Let's look at a more complex one though, and try and understand exactly what we can get out of it. So now this one is so complex, it's over 2 pages. Now, first of all, the biggest difference you've got here is we've got a different year end and we have 2 periods. Now, if it's available, you should always have that comparative period, and that's really useful for you because that's going to let you know what money you've earned, what money you haven't earned, and it's going to make things a lot easier for you. First of all, the most simplest one on there for you to probably understand is your turnover. How much sales have you produced in a particular year? So in this case, we had just shy of £1 million in this one, and then we had just shy of £500,000, £600,000 in the year before. Got those 2 very distinct numbers. The turnover figure should be something that you're very much aware of, should be something that if you kind of had a guess of a feeling for, you should really know what that figure is going to be before you go and look at your account. Because ultimately that's what's been running your whole business. That's what's been kind of going through your business for most of the time. So it is important for us to kind of get to grips with that turnover figure is going to be. But ultimately your turnover is how much you've sold, what sales you've made in a particular year. Then we start looking at more complex areas of it. The first area is your cost of sales. Now, cost of sales, and then we're going to look at selling and distribution and admin costs. They're all going to be the same principle. It's you spending money. The reason we put them into these 3 distinct areas though is because we want to be making sure that we're showing a really good insight into how your business is going. So let's concentrate on that cost of sales to begin with. What cost of sales are costs to your business that are in direct relation to actually sales that you've made. So as a great example, in this case here, imagine we were selling actual physical items. Now, if we sold £1 million and £500,000, our cost of sales should be very, very similar in proportion to each of those numbers. Effectively, the more I sell, the more cost of sales I had, because the more reasons I've had to buy in items to then physically sell those items on. So cost of sales should always be in relation, in proportion to your sales. And what that means is we can create what's called a gross profit margin. Gross profit margin is basically every time I sell something, how much of that money is going to be related to my business when I've taken into account how much it cost me to sell that item in the first place. So buying the physical item and items like that. In this case, you can see that the most important figure here is our purchases item. That's how much we've physically gone out there and bought our items for, that we've then gone and sold for almost £1 million in this case. And then what we've got above and below that is our opening and closing stock. Now, one of the key fundamentals about accountancy and accounting for your business is this terminology called accrual basis. And the idea there is that if I've actually sold something and it's on my turnover figure at the top, I should be accounting for those sales. If I haven't physically sold that item yet, I should really carry that forward, that cost, that element of it, until I finally make that sale. Every item in your expense category, when you're looking at expenses in a set of accounts, should somehow or another relate back to your sales item. And that's where the complex items within accounting can really form. That whole idea that you have to be looking at not just what we would call cash basis, so you physically going and buying items, because that's easy, isn't it? That's items going in and out of your bank account. That's straightforward. But to keep things fair and consistent, we had to be looking at items outside of what you've bought and sold in a year and what relates to those items. Stock figures is a prime example of that. The idea would be here is that as at the last year end, and you can see the item just there, I hadn't sold £128,000 of my items at this point. Not to worry though, because I'm carrying it forward to the next period. I then say how much I went and bought in that period, so 423k. I add those two together. That should be how much stock that relates to that sales figure at the top. Now, if I haven't sold all those items, I still have some left. I then need to carry forward into the next year anything I haven't sold. Because if I can't show the sale at the top figure, in this figure at the top there, in that sales figure, then I can't account for it in this year. The other item here is direct sales. So this is when you're looking at your people who directly work on the production of it. So in this case, in this scenario, these are my raw materials. I then need to pay someone to actually create those raw materials into something to sell. So they're my direct sales. And again, the more I sell, the more costs I'm going to incur, because the more people I'm going to have to employ to be able to convert those raw items into items that we can then sell. We then have selling and distribution costs. So again, very similar to your cost of sales. They should be very much related to your sales figure. But the reason we keep them separate from your gross profit figure in this particular case is just to keep an eye on those costs, to make sure that we can understand that it's not the costs of actually producing the item, but it's what we call the on cost related to it. So for us to get that final sale, yes, we spent a lot of time getting it to this item and everything else, but for some of those items, we've had to incur additional costs. But if someone walked into our store, for example, they wouldn't have to incur those costs. So if we tried to put all of them, we wouldn't get a true gross profit margin. But what we want to be looking at is being able to make sure that we can see and distribute any of those costs relating to selling and distribution separately, so that we can then make sure that we are having a true cost-based figure. And then finally, our administration costs. This is really where your most important costs relate to. See, as a business, these costs here should relate to that if I sold £0 of sales in a year, or I sold £2 million, then in theory I would still have to incur these costs. Now obviously, as you scale your business, your administration costs will probably scale with it, but the idea would be that even if you stop selling completely today, you'd still have to incur these administration costs anyway. And these administration costs create what we would call our break-even point, the figure that you need to make as a business to cover all of those admin costs. Now, some of the key ones in here that are straightforward enough to understand is wages. Yep, anyone who's part of your admin team. Director salary, so maybe you paying and remunerating yourself. And then especially things like rent, light and heat, cleaning the premises, those sort of items are all costs that are really important to you and your business. And then when we bring in the other key items here, so we've got things like motor vehicle expenses, PayPal, credit card machine fees, so you can actually make sales, depreciation, which we touched on a little bit in that last video about how we want to be making sure that we are spreading over the cost of your fixed assets over the life of the assets. Well, in this particular year, we had decided that we were going to charge these figures here to our profit and loss account, and they're the figures that appear in there. Next year, we can expect somewhere in the region of these figures to be charged as we start bringing down those values going forward. We have repairs and renewals, general insurance, those sort of items. Basically, that gives us a figure of how much our admin costs relate to. Now, on the financial statements itself, we just look at this year. We've got the turnover figure, how much we've sold, how much our cost base is going to be in terms of our cost of sales. And notice straight away we take one away from the other. This gives us our gross profit. Gross profit is how much we've incurred based on those sales, less anything that directly relate to those sales, remember. Then we less any of our actual selling and distribution costs. That leaves us with our admin costs, and we take all those together. That should give us our profit figure. Now our profit figure then is subject to taxes. So then we've got taxes here. In this case, we had some losses, so it was actually a refund that we were due. But ultimately, if we had made a profit, what we expect to see going forward is some tax to pay on that profit. What that means then is that gives us our final figure. And if you remember back to that balance sheet video, then that item of profit that we get there is what ends up in our profit and loss account, brought forward against any profit we made in the previous year, plus the profit we made there. That final figure is how much is available to your shareholders. What else does the profit and loss show you? Well, it shows you a comparative period. So I can see how much our profits increased by looking at things like our sales. Has it gone up or down? Our profit made, our gross profit made. Now that gross profit figure is actually more important to us if we start looking at our percentages. If we look here, in the previous year, we earned around about a 27% gross profit margin. So basically what we're saying, for every pound we earned in our sales, we were able to keep 27 pence of it. So for every pound, we were earning 27 in gross profit. This year we're down to 26%, so we've taken a fall in our gross profit margins. The gross profit margins are one of the most sensitive and most important parts for a business. We need to be keeping on top of those profit margins, understanding why they may reduce from one year to the next, so that we can keep those as high as we possibly can. Ultimately, if you think about it, the higher that gross profit figure can be, the more profit you're going to generate. In this case, last year, every pound we were able to keep 27 pence. This year, for every pound we've had, we've been able to keep 26p. And we really should be using that data and analysing that data going forward. The other bits we can see is how we're doing in terms of our selling distribution costs. Well, in this case, we seem to have reduced it, even though we've sold substantially more. So that's telling me that we have either had a lot less of a reliance on our external sales, so having to sell to people using selling distribution methods, or we've been able to find much better deals for us. And that's the sort of conversation topics you'd want to have. Wages and salaries, well, there's been a huge increase. So by looks of it, we've had to employ more admin staff, and directors and salaries have stayed exactly the same. Rent very much maintained, although it's reduced a little bit, but our rates and water has almost halved in this year, telling us either that there's some missing information that we need to bring into these accounts to make them correct, or we've just either reduced our overall cost basis, or we've been able to bring those money into line. Because ultimately, when you look at them from one to another, the actual admin costs have reduced quite significantly from one year to the next. Probably because this time last year, as the accountant, we were telling them that their cost basis were way too high. They need to be able to reduce it. And by the looks of it, by spending a little bit more on admin, they've been able to then find ways to reduce the rest of these costs going forward. You can see in the previous year, we made a loss, whereas this year we made a profit. Really important information for you to understand. And there we have it. There's our profit and loss account. So this is giving you all that information of how much money your business has made in that last period. Hopefully that has answered all of the questions we had about what a profit and loss account is and how it relates to you and your business. If not, let us know in the comments below. Is there anything else you need to know about profit and loss accounts or detailed income statement, if we're going to be pedantic about it, that's going to relate to your business? You can see from the simplest way of looking at it, it's your income less your expenses equals your profit. But as we get more complicated and more intrinsic elements to it, that's where you can see that there is a lot more complexity that you just need to take your time on and understand your figures. Now, one thing I'll always remind you of is that your profit and loss account you're showing there is very much subject to what's happening in terms of rules and regulations us accountants have to abide by. And really the most important figures to you will be your management figures. Your management figures can sometimes differ to what your accounts figures are, because your management figures are looking more of a cash basis. Cash flow elements, things like that, they're going to be more effective for you and your business. But don't be alarmed by that. They are two separate businesses and two separate scenarios. You should be able to, as a business owner, understand how your business is doing on a regular basis using things like QuickBooks Online to be able to make sure you get that real-time information to understand what your business is doing and how your business is relating to it. Whereas the financial statements are designed to be able to be something that we can use to submit to HMRC, Companies House, and keep you statutory requirement. So in some cases, you can get even more benefit from understanding your management accounts. And there we have it, a breakdown of your financial statements. Remember, there's two parts to this series. We've already covered the balance sheet. This was your income statement. And that should be everything you need to be able to understand how these financial statements affect you and your business. Remember to make the most out of this detailed information. Make the most out of it so that you can understand how your business is running. My name's been Aaron Patrick. Don't forget to like, subscribe, share, all that sort of stuff. Let's make sure more people understand how their business runs and how their financial statements affect them. With that, I'm going to say goodbye, and it's been an absolute pleasure to do this video for you. Bye for now.